impaired and not able to really handle the
come on, Rudy. I mean, John Farrell wants to get in here. Do you see evidence that the former vice president is impaired?
Oh, absolutely. 100%. Not only that, I've had doctors look at him, and I've done a podcast on it. Rudy Giuliani's commonsense.com. Go look at it. The two doctors will compare speeches Joe Biden gave 5 years ago with speeches he's giving now. He loses his train of thought in the middle of a sentence.
Yeah, but so do I. Rudy, so do I. John Farrell. John, jump in here.
No, you don't.
Oh, come on. I lose my train of thought on an hourly basis. John, jump in here.
I pledge allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Now, Joe Biden, I pledge allegiance to the United States, Rudy. Under guard.
John, save
the
us
rest.
Here. John
how about he couldn't get those are listen to me. Go get the let's not even argue about it. Go get DSM-5. You know what that is? DSM-5? You don't. It's the psychiatrist's handbook. Go look at the 10 symptoms of dementia. He's got 8 of them. One of them is losing the train of thought frequently in the middle of his sentence.
Here. John doesn't
Another
know
one
the
is having trouble with numbers. 303033033030.
Right.
No, he doesn't remember it.
Yeah. John, jump in here, please.
He doesn't remember it because he has dementia. It's a disease. It's an illness.
Hold on a second.
If he doesn't have it, nobody has it.
Please, let's move on. Okay, honestly, Rudy, we're talking about something that is peripheral to an issue that is much more important right now,
American people
which is the
of a
idea
fair
that
chance
we're in
to
a
hear the
pandemic.
truth,
Rudy,
which is disgraceful.
Please.
It's disgraceful
Rudy,
that you're doing
please.
this.
Honestly,
you're cutting me off in the middle.
Listen.
No, honestly,
right now,
you are being obstructive. I am talking about facts. I'm talking about a psychiatric textbook. You don't even know.
Listen.
You don't want the American people to hear that the guy running for president has an illness. It is clear. It's obvious. Go read DSM-5. Look for the symptoms of dementia. He's got 8 of them. And don't tell me, Rudy. That is the truth. I know it's uncomfortable for you, but it's the truth.
Rudy.
He's also a big crook.
Rudy, I'm not going to sit here
Rudy?
And go through Rudy.
Don't talk to me in that. You do not talk to me in that tone.
Matt Giuliani.
As if what I'm saying isn't worthy of consideration.
I'm just here to ask you a question.
No. I didn't like to dismiss
on the medical
tone.
state of the former Vice President Joe Biden.
Okay, let's focus on the 3.5 million. Let's focus on the 3.5 million from one of the close friends of Putin in Russia that went to his son who's suffering from drug addiction.
Matt Giuliani.
Why would you pay 3.5 million?
Let's focus.
Why did China pay the son 30 million? The Communist Party of China. Can we talk about the things that you don't talk about? The things that you hide from the American people?
We've agreed to do an interview.
Yes, sir.
Not a monologue. Do you want to let me ask some questions?
No, I've agreed to come on so that I can tell the truth. I didn't come on to be a slave to your questions.
Rudy, we're doing an interview. Mr. Farrell is going to ask you a question because that's what we do here.
Well, ask me the question.
John, ask a question of the former mayor of New York City.
But you can't stop me if you don't like what I'm saying.
Rudy.
Well, no, I just want to focus the interview a little bit. Matt Giuliani, you have direct experience in preparation with the president for the debates.
Let us see if you can answer a fair question.
Let's talk about the debates. Governor Christie.
No, why don't we talk about
what's
not talked about? Absolutely not.
We can talk
about. The president wasn't going to. The president was debating.
Not talked about in a moment.
Will you let me finish the answer?
Let me finish. You haven't even let me complete the question.
Let me.
Matt Giuliani. Let's do this.
Good. I'll wait for you to complete the question. Let's see if you can ask a fair one.
I've been asking a question about the debates, sir. So let's start there. I'm not interested in getting combative with you. The debates which you had direct involvement in to prepare the president for. Governor Christie said the president was too hot. What did you learn from those debates?
I learned that the president has to do that when he's debating the moderator and Joe Biden. And when, for months, the media has been covering up facts the American people have to know about Joe Biden, about his incredible history, his and his family's, of taking money from countries like Iraq, countries like Ukraine, countries like Russia, and basically getting 30 million or more from the Communist Party of China, with which his son has been a partner for the last 4 years. The American people don't know that because those questions aren't asked. Those things are suppressed. The reason they don't know that Joe Biden is demented is because you cut off those parts of his interviews when he loses his train of thought, as he did twice the other night. So that's my answer to the question. Next question.
Matt Giuliani, we appreciate your time. Thank you very much for joining us today, sir. The lawyer to the president.
Thank you.
No, you didn't.
And the former mayor of New
You
York
don't appreciate
City.
my time. Boy, you're so phony.
I very much did, sir.
Thank
you very much.
God almighty.
The former mayor of New York City.
You're working for the Democratic.
Thank you very much.
John, it is remarkable
Looking ahead to the debate a little bit later this evening, Tom Keene.
It is remarkable to see this, John, after the state of the city. I have the clearest memories way back, pre-Giuliani, of getting out near the Port Authority into what was, the romance of it now of a tougher New York City. But it's amazing what this guy accomplished, and to those particularly younger, how different he is now, as we just witnessed in, as you correctly said, John, a monologue. Well, Lisa, are you still with us? Did you survive that as a native New Yorker?
Honestly, the one thing I wanted to ask him, as he said that it doesn't worry him that much getting the virus. And my key question is this the new tactic? That the virus just isn't that big of a deal? Is that the message from the White House? That seems to be what President Trump was saying.
Well,
I don't think we're getting a very clear answer on that, and medical professionals pushing back. I do wonder, though, is that the message?
John, what's so important and what Lisa says in that insight is the president saying, well, maybe I'm immune. John, it was such a different tone from Prime Minister Johnson, wasn't it?
What an interview. Why aren't we talking about the elephant in the room? I mean, come on. That was just absolutely ridiculous in the last 10 minutes, Tom. Absolutely ridiculous. I understand Josh Wingrove is with us now, Bloomberg News White House reporter. Josh, fantastic to catch up with you, sir. Thanks for joining us today. Let's try and focus the debate. Very difficult to focus the debate if an individual that is helping you prepare for that debate conducts themselves in that manner. How on earth will this debate shape up on October 15th in Miami, Florida?
I mean, I'm a bit at a loss for words. I guess I would say that Rudy has been dieting on the same sort of feed of misinformation that the president has for some time, and they're convinced that there is conspiracy going on ways, and I think you heard a little bit of that. Look, some news in it also was that he's on hydroxychloroquine as a preventative measure after he sat next to Chris Christie for a few days. Chris Christie, of course, has come down with the virus and checked himself into hospital. The FDA has issued a poison warning for that drug, essentially, thinking it's the emergency use authorization. So, but touted it. So I guess back to you, but Rudy sure seemed upset. I don't know, John, you don't have that effect on me normally, but, there's always tomorrow.
What is so important here, Josh, is we saw the president come out of a very close managed theater into that first debate, and all of us, whatever our politics, saw the response, the performance of that debate. And now we see Mayor Giuliani coming out of the convenience and comfort of the bubble, particularly as personified by his many conversations with a large family of Fox properties. Fine. Can this president, from your reporting, go outside the bubble to speak to marginal voters that don't buy what we just heard from the 107th mayor?
He has not ever shown interest in doing that. And part of the collision course of this election has been the president and people around him coming out of their sort of Fox News orbit and, engaging with other media. And it often ends up like this. And we saw it with that town hall that ABC ran, 3 weeks ago, George Stephanopoulos. And Trump got a lot of questions from people on handling the virus, downplaying the virus, things that people around him have declined to raise with him, right? And so it was sort of a bubble popping a little bit for him. Now, the president continues to believe that there is a silent majority out there backing him, but, poll after poll after poll don't show it. In particular, it looks like he's about to get clobbered among women voters. We're talking by 20 points. There's a poll that showed over 30 points gap among women voters yesterday. So, honestly, I guess, we'll know by November 3rd which reality is correct. But some days it just feels like everyone's looking at totally different song sheets.
Josh, there's also a question, if this is the new message out of the White House, that people are overplaying the virus, that the pandemic isn't that serious, is there an audience for that view? Are there a lot of voters who find that to resonate with them and want life to just go on and are willing to take the risk?
There are, but they're the same voter base that the president has. I mean, poll after poll after poll shows that people believe that Trump doesn't take the virus seriously enough, that they want more action, in particular around Congress. And we saw the president blow up those stimulus talks and then waffle back and forth on Twitter throughout the night. The president, the people think Biden would be better under polling to manage the virus. Like poll after poll after poll shows it. So, I think that any day that Donald Trump spends talking about the pandemic is a lost day for his campaign.
Our international audience, particularly, just got a window into a segment of the president's support there with Mayor Giuliani, and of course, the heat, the ferment of those that are committed to Donald Trump. That's fine, but how does all this redound over to the Senate races? I know you're a White House reporter, but what does this tension, and particularly tension of conspiracy and ill will and almost criminal intent of Democrats, what does that mean to the many Senate races?
Well, the sort of neutral prognosticators have slowly moved the Senate race forecast in favor of Democrats. And instead of fighting this election in Colorado and Arizona, they're fighting in places like South Carolina and North Carolina, places the Republicans shouldn't really be in tight races. And so, as I say, we don't know. There's a lot of unknowns right now around mail-in voting, how many ballots are going to get rejected. So, I don't think anyone is counting any chickens before they hatch. But, the poll, certainly Democrats seem a lot less worried about this poll right now than Republicans do. And, if Democrats take the Senate, it could be a bit of a cold winter for Republicans. And we just don't know what will happen if Trump loses, right? I mean, both in terms of how quickly he'll leave, if he'll leave, but also what will happen to the party. Does he still hold his grip? I think he will, in at least some way, hold a big grip over this party, win or lose.
Josh Wingrove, thank you so much for joining us on short notice. Of course, our White House reporter, an exhausting set of days for him, Kevin Cirilli, and our team. We welcome all of you worldwide and across this nation on Bloomberg Radio and Bloomberg Television after a contentious interview with the former mayor of New York, Rudy Giuliani. We thank you for staying with us. And now maybe to something more traditional, Gina Martin-Adams of Bloomberg Intelligence, our chief U.S. equity strategist. Gina, I don't know if you heard the Giuliani confab, but it devolves down to all of this politics and what it means to the equity markets. What's it mean to the equity markets, say, March or May of next year?
Yeah, I think what the equity market is going to focus on post-election are the prospects for fiscal policy to continue expanding and the offset of that fiscal policy via tax reform and increased tax rates. So I think you're going to have some give and take. Depending on how large the fiscal policy package likely is in a post-election environment, you probably see some of the more cyclically oriented groups in the equity market do reasonably well. But then you've got to think about the timing of how to pay for that. And how to pay for the extensive fiscal policy action that we've had over the last year or so as well. And that, I think, is where we get into a little bit of a sticky point is, do we pay for it with immediate tax increases? In particular, do we see capital gains rates go higher? Do we see corporate tax rates go higher? And how fast do they go higher? Or is it more of a delayed sort of pay where corporates can adjust and tax rates adjust slowly higher, which is a very different dynamic for the equity market. And that remains to be seen. But nonetheless, I do think stocks are going to focus on those two things as the predominant ultimate outcome of the election. That said, in the short term, it's just a lot of volatility and a lot of noise affiliated with the election until we get some resolution.
I got to say, Mark Meadows coming out just moments ago, the chief of staff to President Trump, saying he is not optimistic about comprehensive stimulus. As a result, we're seeing actually yields go higher, as Tom was pointing out, 30-year yields. The interesting thing is markets are completely looking past near-term volatility, and the more that the Republicans and President Trump become entrenched in not getting a stimulus, the more they're expecting a larger stimulus support bill, perhaps come January, if the Democrats do take control. Is that going to be the narrative over the next 3 months?
I think it will be. I think January is a very aggressive timeline, frankly, just considering how long it typically takes policy to get enacted. I would expect something closer to March or April, but let's see. But I do think that it is going to be the narrative to expect persistent volatility until we get some outlook of the outcome from the election. But ultimately, if you think about how stocks should trade, we should be trading on the outlook for earnings growth over the next 12 to 24 months. over the next 12 to 24 months, it seems quite likely that we will see some form of fiscal policy enacted. Now, there's a lot of uncertainty in the short term with respect to the election, and that probably means we won't get a ton of risk-taking. And we won't get a ton of accounts putting on, highly cyclical trades in the equity market in anticipation of growth because it's so much uncertainty in the short run. And you certainly still see that in a volatility contract. But over the 12 to 24 month period, we should see economic growth improve and fiscal policy likely swoop in with some form of stimulus, and that should help the earnings outlook.
Gina, I'm struck by also this idea that should there be volatility, the Federal Reserve will step in. That seems to be the idea that if there is not a fiscal support package passed by Washington, D.C. in the next couple of weeks, some expecting the Federal Reserve to come out and announce additional quantitative easing. Why wouldn't this recipe just be all good for risk, given the fact that it would mean more monetary support now and then even more fiscal support later, leading to just a rip-roaring rally heading into year-end?
Yeah. It is all good for risk. The problem is, in the short term, there is a tremendous amount of uncertainty with respect to the transition of political power if we do see a change in hands of the administration come November 3rd. And as a result, there's not a tremendous amount of short-term tolerance for risk just over the next month. That doesn't mean that policymakers aren't going to provide the support necessary after that point in time. And I do think that investors are looking at that opportunity, but they're watching the bond market really carefully as a signal as well. And
Right.
the bond market is very meaningful for driving outcomes in the equity market. If you have a consistent sell-off in the bond market and yields going higher, that is consequential for equity market valuations as well. So I do think there's a little bit of nervousness out there in the short term, offset by hope and optimism for the long-term improvement in growth.
Gina, I'm going to ask a conventional question here, which seems so odd in the tumult of the times. But Ben Laidler mentioned it in London today, which is the mystery of revenue guessing and earnings guessing as well. What's the tone of Bloomberg Intelligence right now? Are we guessing better revenues than expectations? Are we guessing better earnings than expectations? Which way does that cut?
Yeah, actually, all the way back in May, we started putting together kind of an outlook for the most likely earnings and revenue outcomes and compared our broad equity analyst expectations to the consensus expectations and found that we were somewhat more optimistic than the consensus, and that still stands as of today. Looking into 2021, I think one of the most underappreciated sort of aspects of this is you don't have to do much to do better than 2020. Without a doubt, we are going to see earnings recovery in 2021. We are going to see sales recovery in 2021 relative to the first half of 2020, simply because the economy is operating. Recall, 6 months ago, we weren't even in an operational economy. We were completely shut down. So the difference is that we are operating. We're not operating at 100%, but even operating at a 50% economy puts us in much better stead from a sales and earnings growth perspective. We get a tremendous amount of skepticism. I hear this every day from clients saying, look, you can't get a double-digit earnings growth recovery because you can't, you're not going to see an economic recovery. But the reality is, we are in economic recovery simply because we have an economy that's somewhat functional. And that result of that is we're going to see likely high single-digit sales growth, and we're going to see double-digit earnings growth at least through the first half of 2021, as long as we don't shut down again.
Gina Martin Adams, thank you so much. Greatly appreciate that. On the equity markets here in a day of tumult, and of course all crescendoing towards Kevin Cirilli in Salt Lake City in this really unique debate tonight, separated by plexiglass, two vice presidential candidates with candidates of 74 and 77 out front leading their tickets. Lisa Abramowitz, we've had a huge response to our conversation and the monologue of the former mayor of New York. Lisa, I say this with immense respect to the fabric of the Abramowitz family growing up. I think you've lived in all 5 boroughs at one point. But Lisa, I'm looking at the Rudy Giuliani I know that saved New York from law and order and crime and the terrible moments. John's looking from London as someone from the Great Britain. What were your thoughts on the change in this mayor that we've observed over 3 decades?
a big change. I'll just say delicately, a large change. There has been a transformation. My question is, how can we have a conversation if we don't even listen to each other? And Tom, this is the ultimate question here. If you have all the health experts saying that this pandemic is serious, that it has a substantially higher mortality rate than the average flu, that especially older individuals are incredibly susceptible to that and don't get the same kind of health care that the president gets. How can we have a conversation if someone just says, I don't buy it? Right? And I think that that's part of the issue. And yet, you know, there is a question, how is this going to read to voters? And Tom, that will be the question tonight. How does Mike Pence calibrate this message with a very different attitude than either Rudy Giuliani or President Trump?
And with the tweets that we're seeing right now, and there's been a host of tweets from the president, of the many tweets here, and he's going back and forth with many, including links to different TV programs he has an affinity with. I'm just going to go to an all caps headline. I'm not going to editorialize this, but this is the moment we're in, particularly for our international audience. The President of the United States. Dems want to shut your churches down, comma, permanently, period. Hope you see what is happening, period. Vote now, exclamation point. In the moment, one of the tweets this morning from the President of the United States. We thank all of you for watching. It's really been an extraordinary set of hours here, and we move forward through the day. Please stay with us on Bloomberg Television and Bloomberg Radio as well. Good morning. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the Open starts right now. 30 minutes away from the opening bell. All markets, I promise you. Equity futures up 27. We advance 0.8%. We begin with the big issue. Stimulus talks breaking down in Washington, D.C. The president tweeting he is instructing his team to stop negotiating with Speaker Pelosi, suggesting she isn't negotiating in good faith. This after Chairman Spouse spent the day pushing for Congress to act.
There is likely to be a need for further support, targeted and sustained policy support. Too little support would lead to a weak recovery. The outlook remains highly uncertain. The risks of policy intervention are still asymmetric. The risks of overdoing it seem, for now, to be smaller.
According to President Trump, he agrees, offering a standalone bill for stimulus checks that will go out immediately, an offer that was in the Senate GOP skinny bill a month ago. Many of you are confused, I am too. The Washington Post reporting that on a call yesterday with President Trump, Senate Majority Leader Mitch McConnell suggested that Pelosi, quote, was stringing him along and no deal she cut with Mnuchin would command broad GOP support to pass in the Senate. It's becoming clearer that the biggest gap in talks wasn't between Mnuchin and Pelosi, but arguably between Mnuchin and McConnell. Welcome to Square One. We never really left. Let's bring in Kevin Cirilli, Bloomberg Chief Washington correspondent, joining us from Salt Lake City, where we will have some vice presidential debates a little bit later. Kevin, the fiscal talks front and centre for this market. What happened in the last 24 hours?
New developments just within this last hour as Mark Meadows, the president's chief of staff, saying on Fox Business that reportedly they are now looking at standalone bills that he has spoken with Treasury Secretary Steven Mnuchin as it relates to standalone piecemeal bills. However, that is a non-starter with Democrats. That is a non-starter with Speaker Pelosi. And President Trump, within the last day, going on or posting rather several tweets as it relates to fiscal stimulus talks and backing away from a deal, saying that it's not going to be until after the November 3rd elections until there is a deal to be had on fiscal stimulus. Now, from an investor standpoint, what this means is that there is still going to be stimulus. It's just not going to happen before the election.
Got a little glimpse, Kevin, of the preparation for debates with the former mayor of New York City, Rudy Giuliani, a little bit earlier. Very competitive. I'm just wondering, Kevin, tonight, if you expect it to look anything like what we saw a week ago.
I don't anticipate that this will be like what we saw in Ohio. I talked to several sources now on the president's reelection campaign, as well as on Joe Biden's presidential campaign. And what they said is that they are looking forward to having a more substantial debate. This is a deeply conservative state, one where Vice President Mike Pence is sure to have a political ideological home. We should note that his task is to, one, defend the coronavirus response from the administration. He was a leader in that. And two, to also shore up some of the president's base who is a bit concerned about the president's fiery rhetoric. For Senator Kamala Harris, this is a national reintroduction of sorts, someone who is likely going to be at least one of the major leaders within the Democratic Party for years to come. She also has to clear the commander-in-chief hurdle. Any vice presidential candidate has to pass that heartbeat away from the president test. And with health at the forefront of this race, that is something that she is going to have to speak to as well.
Kevin, thank you, sir. Great to catch up. 27 minutes away from the opening bell. Equity futures up 25, up 0.75% on the S&P 500. PIMCO's Joachim Fowles expecting a cyclical recovery with some economic scarring. He goes on to say the following: the first half of our secular horizon is likely to be characterized by the long climb to recovery with above-trend growth for a couple of years as the global economy emerges from the deep hole of the COVID recession. On this report, right here first on Bloomberg, I'm pleased to say that Joachim Fowles joins us right now. Joachim, always lucky to catch up with you, sir. Let's just talk about the outlook here and how you plug in what you expect around fiscal in the United States of America in the coming year.
Yeah, so hi, John. Thanks for having me first. Fiscal is obviously key. And I think the events overnight are a good reminder that fiscal is not a given. I think there's a view out there in the market that whatever happens, we will get massive additional fiscal support. And that may well be the baseline. So after the election, depending on the outcomes, we will probably get more fiscal support. But again, it's not a given. There are political constellations where that may not happen. And so I think that poses significant risks over the not only the near term, but also the medium and longer term outlook. Fiscal policymakers went all in this year, supported by central banks. Again, many people in the market expect that this is, the new world and that this will continue forever. But there is a significant risk that we end up again with either political gridlock or that the austerity cult makes a comeback, either in the US or in Europe. And so there is not only upside risk to growth and inflation, there are also downside risks that I think markets have not fully factored in at this stage.
So we can get to the markets in just a moment, but just talk to me about how difficult it is to have a projection at PIMCO, to put together some kind of forecast. Do you just have a band now, or do you actually have a forecast?
We have a band, we have a scenario, or we have several scenarios, and the bands are very wide. And I think the most important thing, and we discussed this at our recent secular forum, which looks more at the next 3 to 5 years rather than just the next year, I think it's extremely difficult to have any confidence in any particular baseline forecast. Our story is that we will see escalating disruption over the next few years. I think we all got used to dealing with disruption over the last few years already, but I think what this crisis has done, what the pandemic shock has done, is it amplifies several of the secular disruptors that we and others have been emphasizing for some time, right? China's rise, populism, technology, these are all things that are disruptive and have been accelerated due to the pandemic shock and the policy responses. On top of that, we've had these weather-related events this year, which have put even more of a focus on climate-related risks, which is another major secular disruptor. So when it comes to forecasting, I think it's much more important to think in scenarios and think about the things that could go wrong or could go right, rather than writing down any precise path for growth and inflation.
So I understand, Joachim, why it's so difficult right now to forecast the cycle and the recovery. Why is it easier to sit here and say that the return profile of markets will be different to what we experienced in the last 10 years if we don't have much conviction of what the recovery will look like?
Yeah, so I think the one thing we can say is that the environment of high returns and low volatility of the last 10 years is really behind us. And the next, say, 5 years will look very different. A couple of reasons for that. The first one is that valuations are very high, both in equities and bonds. Both do not look cheap. They look relatively expensive. And on top of that, we have this potential for escalating disruption over the next few years, which will lead to more volatility. So while we all got used to a world where you have high returns and low volatility, I think the future will be one of lower returns, much lower returns, and higher volatility. And that means investors will have to be prepared for that volatility. But conversely, if and when the volatility hits, it will also create opportunities. And you have to be prepared for that. And that means you have to be much more active. Just buy and hold, which was maybe the right strategy for the last 10 years, is not the right strategy in this very different world.
So an argument for active management. Not a surprise to hear that from someone over at PIMCO right now, Joachim. You'll let that joke just go to one side just for a moment. One thing in this report is on QE. And I think most people assume that QE, low rates and loose monetary policy can keep financial conditions loose and generate excess returns in markets too. As you've pointed out, the experience of Europe and Japan says otherwise. Do you think that lesson applies to what we could experience here in the United States?
Yes, I think it does. So low yields, QE, are no guarantee for a massive outperformance of risk assets. We've learned that in Japan. We've learned that in Europe. The question is, why are yields low? If yields are low because the economy is not doing well, then that's not a great environment for risk assets. And so looking ahead, the thing we worry about is that the secular rise in the share of profits in GDP, so the outperformance of earnings over GDP growth, which was the story of the last 20, 30 years, that is coming to an end. And the reason is that, well, the profit share has risen very high already. We are seeing deglobalization. There is a possibility of re-regulation for important sectors of the economy. Taxes for corporates may go up. And generally, there is this trend away from a focus on shareholder value to stakeholder value, right? So this is happening within corporations. And all of that means that the high earnings growth of the last 20, 30 years is not guaranteed for the future. So if that is the case, well, then we could move into an environment where, yes, bond yields are very low, the returns in fixed income are very low, but you're also not getting the outperformance in equities that we all got used to over the last 10, 20 years.
Joachim, some huge challenges in the years ahead, and really enjoyed the read, the secular outlook out just now, and worth getting your teeth into. Joachim Faust there on the latest from PIMCO. Want to head to the market desk now and get you some movers. Futures up 27. Here are the stocks to look at ahead of the opening bell. Here's Abigail.
Hi, John. Well, we are seeing a really nice bounce back for mega cap tech stocks, which had been under pressure yesterday, even prior to President Trump's tweet around ending stimulus negotiations with the Democrats. And a piece of that pressure on the day was news that came out after the bell, the fact that a House panel is recommending the breakup of some of the big tech companies. But today we have Apple, Amazon, and other tech stocks nicely higher, really recovering from that sell-off. NVIDIA, the chip maker, one of the big high flyers this year, up more than 130% right now, set for big gains, up 8 of the last 9 days over that time period, adding 13%. And then we have another day of rally, or yesterday we actually did not, but today we do have, at this point, John, the big banks recovering. JP Morgan actually just about flat there. Let's see whether or not those rising yields as bonds sell off on this risk on tone can help the banks a little bit more as the day progresses, John.
Abigail, thank you. Great to catch up. As always, Abigail sticking with us going into the opening bell. Coming up on this programme, vice presidential candidates preparing to square off in Salt Lake City. That conversation coming up next with the RBA founder and CEO, Richard Bernstein. Next, right here on Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Live coverage of the vice presidential debate. That starts on Wednesday night at 8:30 p.m. Eastern Time on Bloomberg Television and Radio.
He knew it was a deadly disease,
What did he do? We've done a great job.
I know how to get the job
Well, you
done.
didn't do very well in swine flu.
Everybody knows he's a liar.
I graduated last in your class, not first in your class.
He's just afraid of counting the votes because he knows the outcome.
You're wrong.
It's hard to get any word in with this clown. The question is,
the radical left.
Will you shut up, man?
Listen,
no, the answer to the question is no.
The presidential debate offering plenty of drama, little on policy. The attention now turning to the vice presidential candidates squaring off in their first and only debate tonight in Salt Lake City. The event taking on far greater significance with the president facing his largest deficit in the polls and just 27 days remaining until the election. Looking at where the money's going and where the polls are, is Bloomberg's Scarlett Fu. Hey, Scarlett.
Hi, John. Well, this might be a tall order, but if you're looking for some more substance in tonight's vice presidential debate, look at health care because, of course, Vice President Mike Pence chaired the White House's COVID panel, and Kamala Harris probably sees that as an easy target. But really, the focus is all on stimulus, when it's coming, the form that it takes, and the prospect for it. And President Trump's announcement yesterday that he was suspending all negotiations between the two sides flipped a switch to risk off across asset classes. When you look at futures this morning, they've steadily made recovery starting last night after a flurry of tweets on specific handouts to airlines and to small businesses. So this piecemeal approach has at least halted the sell-off for now. As for how analysts are gaming out the election, with Biden now leading in the polls firmly, UBS says a blue wave would mean more fiscal spending. Yes, Democrats would probably want to raise corporate taxes, but stronger stimulus would offset that, basically resulting in a neutral impact on markets. Barclays actually takes it a step further, saying that a Democratic sweep would lead to stimulus that would more than overshadow and offset their policy agenda. So in the short term, that would be risk on. Most scenarios out there do not favor the U.S. dollar. Kit Jukes over at SocGen told Surveillance on Monday that the U.S. seems to be refocusing away from equity and tech-friendly policies to measures that are more household-friendly. So that would lead to more deficit spending, which would be dollar negative. Goldman says a Democratic sweep would accelerate dollar weakness, while a Trump re-election would support the currency. And looking at gold, it's been left meandering here. The focus on some kind of stimulus deal earlier in the month had fueled reflation hopes. Higher inflation, of course, would favor gold. Retail interest, we know, in gold has been intense. Gold ETF holdings have been climbing to a record, as that white line indicates. But the price of gold has been really held hostage to the state of stimulus talks, which right now have degenerated into nothing. John?
Scarlett, thank you. As we count you down to the opening bell, snapshot of the price action just quickly. Equity futures advanced at about 0.75%. The 10-year yield higher, up 4 basis points to 0.7718%. We've talked about that asymmetric risk around the Treasury market. The good news generating a greater sell-off in Treasuries. The bad news not getting that huge rally that you might expect in previous years, particularly over the last couple of months. The other story I want to get to briefly, and I know traditionally this show is a Brexit-free zone, but let's take a look at sterling just very quickly. Headline crossing on Bloomberg, the UK planning to quit Brexit trade talks if no deal is seen by October 15th. We're reporting that right here at Bloomberg. This following a report suggesting that the European side would ignore that October 15th deadline. So the UK want to recognise it, and the EU may well ignore it. Confused by Brexit? I'm sure all of you are. Cable lower, sterling against the US dollar, 128.67, down about 0.1%. That's your Brexit load for now. Guy Johnson far better at it than I am. He'll pick up that story in about 40 minutes' time. Here's the story for your portfolio looking ahead. RBA's Richard Bernstein weighing in on the impact of COVID on the markets. Despite political rhetoric, the risk from the disease remains real. If more people get sick, more people don't go to work and more businesses close. It's pretty simple. The only way, the only certainty as we head towards 2021 is continued uncertainty. Lucky to have Richard join us right now. Richard, fantastic to get you with us on the programme. It's such a huge challenge, a world of uncertainty, let's call it radical uncertainty, and I think the challenge of the moment is a better understanding of how to construct a portfolio for what you're expecting to come in the coming year. Richard, help us do that.
Yeah, so Jonathan, we are at RBA, we are really looking at a balanced portfolio right now between traditional defensive shares, things like consumer staples and healthcare. But then on the other side, we have things like energy, industrials, transportation stocks, material stocks, things like that. And I think, you know, you have Uber bulls and Uber bears right now. And of course, somebody's going to end up being right. But I think the question that a portfolio manager has to ask, is that a prudent way to manage money for clients? Do you really want to make a guess on the outcome here? What we've tried to do is have this balanced approach and adjust the balance as the fundamental data continues to improve. And if it improves more, then we'll become more cyclical. If it deteriorates, then you become more defensive.
So this year, Richard, a balanced portfolio, a diversified portfolio, the traditional 60-40 mix, has actually done pretty decently. The bonds portion did tremendously well. I think the long-term ETF, the long Treasury ETF, TLT, returning about 20% the last time I looked a couple of days ago. And yet exactly now is the moment when people start to question the 40 portion, the bond role in a portfolio, and the traditional way we'd look at putting one together. Richard, what has changed for you?
Well, I think for us, first of all, I don't want to mislead people and make people think that we were out there in the 10-year and 30-year bond, because we weren't. We didn't have enough duration on our fixed income side, to be perfectly honest. But I think the thing that's reasonably encouraging right now, if you're a fixed income investor, is the steepening of the yield curve. I think that is a very traditional sign that people want to watch. And the steeper that it gets, the better the outlook for the nominal economy. And I think that recently it has started to steepen again. The 10-year has been selling off a little bit. And I think people should be encouraged by that. And I think that's a critical tool for the banking sector. It's a critical tool for lending. It's a critical tool for risk premia. All these type of things are going to filter their way into economy. Honestly, Jonathan, I have to tell you, I've been very confused by the Fed's actions, because the Fed has been flattening the curve when history says that what you want is a steeper curve to encourage private sector lending. That's not what they're doing, and you're seeing the commercial bank stocks lag as a result.
Loretta Mester of the Cleveland Fed earlier this week, Richard, suggesting that they could do what they did last time around and maybe move some of the buying to the longer end of the curve. This speaks to what you're saying, Richard. Can you build on why you think that is a mistake?
Yeah, look, the Fed is not supposed to be the economy. The Fed is supposed to be the backstop to the economy, the oil of the engine, you know, any kind of metaphor you want to use there. That's what the Fed's supposed to do. And what the Fed is actually doing is disintermediating the traditional banking sector. They're gaining market share away from the traditional banking sector by going out and buying bonds at the long end of the curve. To me, this is very, very confusing. They clearly think that the absolute interest rate is more important than the slope of the curve. But when history shows very clearly it's the slope of the curve that stimulates lending and stimulates that grease in the economy, I don't understand why they're flattening the curve. It just makes no sense.
So, Richard, a final question from me. I don't want to suggest that anything is uninvestable, but from your perspective, looking at your risk-on, risk-off barbell that I've been looking at right now, you went through your overweights and the particular sectors you would put in that. I'm trying to understand where banks fit in, given your concerns in the bond market.
Right. So you know, there's two things I didn't talk about there, Jonathan. One was banks, one was technology, and they're almost the opposite ends of the spectrum. If you think that banks are going to work, you don't want to hold technology. If you think technology is going to work, you don't want to own banks. It's almost the opposite extreme on either side. Look, I think the way to answer your question is to say people should watch the performance of NASDAQ versus the Russell 2000. If NASDAQ is outperforming, that says that the market's implied forecast is extraordinarily bearish for the economy. Only a few companies can grow. If we see the Russell 2000 outperforming, it says there's a broad leadership in the market. The economy is going to be okay. I don't think most people understand that, and banks would go along with that broader leadership. So if you're in the Fab 5, those 5 or 6 technology stocks, you have to realize that your implied economic forecast is extraordinarily bearish. I don't think most people understand that.
Richard, great to catch up, and a valid point, sir. We'd love to get you back on the programme soon. Richard Bernstein there on This Market. Coming up, the analyst action you need to know ahead of the opening bell at our morning calls. Then later, we'll talk about the big tech names facing dramatic reforms to curb its power. JP Morgan's Jack Caffrey joins us at the opening bell for more. 7 minutes away from that cash open. Equity futures up and looking good. Futures rallying. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Five minutes away from the opening bell. Equities up nicely for the equity bulls at least. Beautiful morning in New York. Up 28 on the S&P 500, advancing 0.8%. That's the price action. Here are the morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with JP Morgan. Upgrading JetBlue by 2 notches, raising shares to overweight from underweight. The analyst citing effective cost controls and a favourable risk reward. Second call, Jefferies upgrading Workday to a buy, 260 price target. The analyst seeing multiple options to drive long-term growth and sustainable margin leverage. Your third call, your final call, from Pivotal Research, raising its Netflix price target to a street high, $6.50. The analyst expecting the company to remain the dominant global streaming player for the foreseeable future. That stock up by about 2.4% ahead of the open. Coming up, much more on big tech. A House antitrust panel seeking to rein in the giants of Silicon Valley. We'll get the view of JP Morgan's Jack Caffrey next on Bloomberg.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Wednesday morning, equity futures rallying up 28 points, advancing 0.8%. Your outperformance, believe it or not. Nasdaq futures up 1%. We'll talk about big tech in a moment. Switch up the board 15 seconds out from that cash open. We look a little something like this in a bond market. Treasuries down, yields higher at 4 basis points to 0.7752%. Couple of basis points away from the week's high of yesterday's session, just approaching 80 basis points. In foreign exchange, the outlook for the European economy getting cold water frozen on it. Freezing cold water poured all over it in the last couple of weeks. Euro-dollar still 117.72, up about a third of 1% there. And crude has been choppy over the last week. 39 handle down to 39.70 and off by about 2.3%. That's the cross-asset price action 20 seconds into the open at the market desk. Back with us, here's Abigail.
John, let's start out with the airlines, which are popping higher. This, of course, after President Trump recently tweeted about individual stimulus packages and for aviation, $25 billion. So on this, we see investors, traders hopeful with both American Airlines, Delta, and others, in fact, trading higher. And we now have the bank sharply higher, too, up 1.5%, briefly dipping lower around 9:10 this morning on a headline about overdraft fees, quickly reversing that, trading in line higher with yields up, fitting the risk-off tone as bonds sell off. Now, another group that's doing pretty well, John, is technology, the fourth best sector group, up 1.1%. Apple, Amazon, Google, all higher. This, of course, yesterday, lots of weakness for these big tech names in anticipation of what came out after the close, or a House panel calling for the breakup of big tech. We see Facebook just about flat. But the fact that you have most of these stocks higher, John, tells you that this idea is not new. We've had it floating around for a couple of years, and it's probably not happening anytime soon. Certainly not a 2020 event with these stocks, again, popping higher on the morning. One of the best industry groups here as we trade on this Wednesday morning, John.
It's a valid point, Abigail. It really is. That has been the story over the last several years. About 90 seconds in, the S&P 500 up a little more than 1%. Abigail pointing out how well IT is doing. Information technology up about 1.25%. Every single industry group, every single sector advancing this morning. Materials, consumer discretionary, industrials, financials, top of the pile. The bank's getting a helping hand from the bond market over the last couple of days. Big tech very much leading the early gains this morning then, but under fire in D.C., as Abigail points out. A House panel proposing reforms to curb the power of the four largest U.S. internet companies, saying the economy and democracy are at stake. Writing the following: underdog startups that challenge the status quo have become the kinds of monopolies we last saw in the era of oil barons and railroad tycoons. These firms have too much power, and that power must be reined in and subject to appropriate oversight and enforcement. Bloomberg's Scarlett Fu has been following the story. Hey, Scarlett.
Hi, John. Yeah, 16 months, 7 hearings, and 450 pages later, the House panel is making some broad recommendations to Congress. Here's what it wants. It wants legislation that bans these companies from owning different lines of businesses, which would entail breaking them up. Also, beefing up existing antitrust laws and curbing future acquisitions. And in the same way that you can keep your phone number when switching telecom carriers, give consumers the ability to move their personal data between services and platforms. Now, the big four tech names largely operate in different digital businesses, but years of expanding from hardware to software and vice versa, and buying out startups allowed them to enter new markets and diversify their business, and as you can see, grow a lot faster. Facebook's revenue jumped almost 200% in the past 5 years. Investors certainly rewarded the stocks, sending them to new heights that pulled the NASDAQ 100 and S&P to new heights. Even with the sell-off in big tech over the past month, the NASDAQ 100 is at greater risk of a correction because it is much more extended relative to its long-term trend line than the S&P 500. So, bottom line, tech is much more at risk if stocks were to recalibrate and return to their long-term trajectory. Of course, John, this is Congress, and even with both Democrats and Republicans having issues with big tech, they don't see eye to eye and can't see eye to eye. Democrats led the panel's investigation. They want to overhaul antitrust law. Republicans also have their issues with big tech. They accuse big tech of bias against conservative voices on their platforms. So, stalemate. And even if the Democrats were to take Congress and you would have a Democratic sweep, Republicans would still be in a position to block any kind of tech legislation. John?
Scarlett Fu, thank you. All valid points once again. Scarlett Fu on top of this story over the last couple of days. Investors growing increasingly cautious on tech as its outperformance begins to wane. Morgan Stanley, Mike Wilson, out front on this over the last couple of months, expecting mounting interest rate acts to carve out a rocky path for the high flyers, writing the following: the risk for rates to move higher in a non-linear manner is greater. By definition, that increases the risk of a move lower in those assets most tied to long-term interest rates. Such a risk is underappreciated in our view. JP Morgan's Jack Caffrey joins us now over the phone. Hey, Jack, always great to get you with us on the show. I just wonder, the biggest risk for tech right now, is it fiscal and higher rates and not regulation?
Well, I think you point to the biggest risk in the shorter term is certainly a broadening of confidence in the economic recovery. If we look at what's working today, material stocks, discretionary stocks, within technology, it's the semiconductors that are doing better. So there's some real confidence, it seems, in the market that we are going to get to a broader expansion. And I think that can result in some money leaving some of these higher growth, secular growth situations. And I think that weighs not just on tech, but it weighs on communications. Because let's remember, a lot of those FANG names are not actually considered technology stocks anymore, but wind up in a smaller, different sector that people tend not to talk about as often when you think about risks in the market.
Jack, it's a good point. One thing that you've said is focus on the fundamentals. Recessions cause bear markets, not politics. But I don't want to get too cute about this, but in this particular situation, the politics do matter for the shape of the recovery around the fiscal plan. How do you navigate that at the moment, Jack?
Yeah, in the very short term, unfortunately, I think we wind up being more reactive than we want to be. And I think that's where we try to come back to, let's talk about the fundamentals. The fundamentals are the employment picture is getting better. The consumer savings rate rose thanks to stimulus checks, a political reality. But you wind up with the consumer having more dollars in their pocket. As a result of those more dollars in their pocket, they're more confident than you might have thought they would be for the levels of unemployment we're looking at. And when you start thinking about, well, is the consumer acting on that, the consumer is certainly in a better position. You look at mortgage applications up today, a housing market doing exceptionally well. The confidence weakness, if there is it, winds up being more in the corporate sector, where you see falling demand for commercial and industrial loans. And I think you pair that against better trading, better activity, more confidence in the PMI. I think the corporate sector actually comes along, and they're going to be let out of this recession by the consumer, as we saw the last time around as well.
Jack, when you say bad headlines don't necessarily mean bad markets, what do you mean by that?
It's effectively this idea that we'd like to talk about the markets being able to discount factors, be able to discount where the world winds up going with. But at the same time, yesterday's rally yesterday's trading activity seemingly was built on the idea we were going to get to a stimulus agreement, and then one tweet later, that the hopes for that stimulus agreement in the short term were dashed. Market sells off 1.5%. That was a negative headline. Market closes, and then you start getting a revision to the tweets, effectively talking about, well, how can we move forward with more targeted stimulus? And now you see, say, in the very short term, airline stocks responding very positively to the the prospect of getting relief. And so lacking a crystal ball on what news item is going to hit at what moment, markets in the very short term are very reactive. An efficient market hypothesis person would tell you, they're discounting, changing fundamentals, or they were just surprised. You go either way with that one. But since you can't predict news flow, you come back to which way are expectations biased. And frustrating as it is, the more uncertain the environment, the more likely expectations are more reasonable, more likely to be beaten. And it's when we think that you have high confidence or almost certainty in a particular outcome, then markets are most likely shocked. Again, coming back to yesterday.
Let's talk about, Jack, this is really important. Let's talk about how active you should be when it comes to things like rebalancing. I'm sure you're familiar with that mythical Fidelity study. I call it mythical because it's not clear it ever happened. But the story goes that the best performing accounts over a long period of time belong to the people who are no longer with us anymore, Jack, because they hadn't been touched. How much time do you spend just in therapy with clients telling them, don't do anything?
Well, I mean, ultimately, I think the highest value that an advisor can have with their client is trying to prevent them from overreacting to news. Which is to sit there, and sometimes it's a function of saying, we've had a great year relative to what you were expecting, and maybe we should take some chips off the table, merely because it's very emotional to think that when markets are rising that you don't need to rebalance. Alternatively, clients who were sellers in March have had very negative experiences, and they curse the day that they sold, and they curse the fact that the market has moved, and they keep waiting for pullbacks in order to get engaged. And that generally keeps pullbacks ultimately much more shallow. And so, human nature is not necessarily easily wired for responding to markets in a short-term basis. And so the value, I think, of working with an advisor is helping to try to tamp some of those emotional highs and lows, and trying to impose a little bit of discipline around the rebalancing discussion to make it more of a consistent process and less of an emotional process.
Jack, smart conversation. Sensible one too. Jack Caffrey, appreciate your time, sir. 10 minutes into the session, equities advancing. Every single sector on the S&P 500 in positive territory. On the S&P this morning, up by about 1.1%. The bank's doing okay. The wires in the bond market over the last couple of days, yields up 4 basis points to 0.77% on a 10-year. At a market desk with your movers, back with us. Here's Abigail.
John, we have a number of stocks to take a look at that are moving in the direction of the markets or popping higher. Let's start out with the shares of Eli Lilly, as the company is seeking emergency authorization for its COVID therapy. This, of course, has come after studies that it has proven reduced hospitalizations. But you also have to wonder whether or not this has something to do with President Trump's recently taking Regeneron's antibody cocktail and the possibility of some sort of emergency authorization there, wanting to make sure that they're in the fray. The Gap is also trading higher as Barclays has upgraded the stock by 2 notches to an overweight from an underweight, setting a $20 price target. So investors like the fact that a bear is out of the way. Levi Strauss higher on a very strong quarter, much better than expected. Low expectations. Their e-commerce business really jumped. And then finally, Square is popping up 3.8%. And this has to do with another tweet from President Trump and his offer for that $1,200 check. Their direct deposit unit got a bump on the other rounds of stimulus. So investors thinking perhaps that would happen again if that check were to come. Big if there, John.
Abigail, big if. Thank you. Coming up, calls for additional fiscal stimulus, creating division within the Federal Reserve. That conversation's still ahead with Clear Harbour's Aaron Kennan. We'll do that next. In the markets right now, equities bid. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? 2 perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
$14 minutes into the session, we had some weight to the S&P, up by 1.26% on the S&P 500, up by around about 1.4% on the Nasdaq. A nice rally this Wednesday morning. The session is young, but we do have a bid in the equity market. Markets looking ahead to the Fed minutes following Chairman Jay Powell's push for more fiscal stimulus.
At this early stage, I would argue that the risks of policy intervention are still asymmetric. Too little support would lead to a weak recovery, creating unnecessary hardship for households and businesses. Over time, household insolvencies and business bankruptcies would rise, harming the productive capacity of the economy and holding back wage growth. By contrast, the risks of overdoing it seem, for now, to be smaller.
Bloomberg's international economics and policy correspondent, Bloomberg's Michael McKee, joins us right now. Mike, the substance of the message, not new. The delivery and the boldness yesterday, I would say that was a little bit of a shift from the Fed chairman. Your take, Mike?
Oh, absolutely. It was the clearest call he's made yet for additional fiscal help, which is why I don't think we'll see a lot from the minutes today. I mean, the market sold off yesterday when Donald Trump tweeted he was walking away from the negotiations, and we're up today because then he tweeted again that he might be willing to accept some standalone bills. In a market that changes on a tweet, what good are 3-week-old minutes of a meeting going to be? Not a whole lot, I would argue. One thing that Wall Street is going to look for today, however, is how divided the Fed might be over the framework language. We kind of know that already. We had 2 dissents. Since September 16th, we have had 48 Fed speeches. There are 6 more today. 48 Fed speeches, including 4 by Chairman Powell, 5 if you count his post-meeting news conference. So they aren't leaving us in the dark. We know the 2 dissents were over the language in the statement, and we know that St. Louis Fed President Jim Bullard thinks maybe we have enough stimulus. He seems to be the only one on the Open Market Committee right now. I guess the thought is there may be some kind of formulation in the minutes language of a few, some, many, that would suggest there's enough division out there that when the Fed eventually raises rates 2 or 3 years from now, it might come a little faster. And for that, you would watch the financial conditions indexes to see if they tighten a little bit. They have been tightening a little bit, but it's still well below zero, still fairly loose out there. The other thing that the markets might look at is the weighted average maturity of the Fed's portfolio. They're very heavily weighted to the short end, and there's some expectation they may want to term out and go longer in future meetings. So they'll be looking for some kind of talk about that. I guess what I'd be interested today in, John, is any talk about financial instability, the idea that we're seeing sort of play out today, that markets are just going to always go up because they always feel the Fed is going to have their back.
That is one view that many people share. Michael McKee, thank you. Clear Harbour's Aaron Kennan saying markets are depending on the Fed to prop up the economy, writing, quote, expectations of further stimulus persisted over the summer, but brinkmanship on Capitol Hill has since turned investor attention back to the Federal Reserve for a sense of solace. Joining us now is Aaron for more. Aaron, fantastic to catch up. Thank you very much for coming on this programme. What is next from the Federal Reserve, given what we've seen already in the last 8 months?
Right. I think the tools that the Fed have at their disposal, they clearly used in a significant fashion back in March, Jonathan, where they essentially looked at the capital market structure. They looked at where credit spreads had gapped wider. The municipal bond market had certainly been quite wobbly back in that period. And they expanded their balance sheet. I think what we heard yesterday from Chairman Powell was, okay, credit spreads are tight. Almost every major fixed income asset class is now actually up on the year. We're doing our job, and we are not, through our mandate, able to send checks to the American people, particularly those that are unemployed in the airline industry and the hospitality industry. So, wake up, Congress. If you want to assist that part of the economy in those people, we do not have the power to do that. And I think that's what we heard from the Fed yesterday.
Well, Aaron, what do you think about financial conditions and the extent to which the Federal Reserve alone can keep them loose?
Well, they can provide liquidity through the capital market system, and they've done a wonderful job on a year-to-date basis in the midst of this crisis doing that. But certainly, their powers are limited. Don't fight the Fed is certainly something that I think is worth hearkening back to. I certainly wouldn't want to fight the Fed here. They have lots of tools. There's talk that if things got really ugly for some reason in the economy, that they could even perhaps buy equities. They're not doing that, but they were close when they started buying crossover or had the ability to buy crossover high yield product. So the Fed has a lot of power and a lot of influence, but at the end of the day, again, I think the fiscal tools are required now to address and identify the problems that require addressing here going forward. PPP ran out in July. The top up and the unemployment insurance of $600 a month kept incomes nicely elevated over the course of the summer and into the fall, and that's running out. And now the question is whether or not, of course, the administration and Congress can sit down and work something out. And we're seeing that tit for tat over the last 24 hours.
Fiscal headline roulette, and I'm not sure you want to play that game with me right now, so let's not. The story beneath the headlines is arguably the story that I think has got everyone's attention, including yours, Aaron. It's been described as a K-shaped recovery. The limits on the one part of the economy and the acceleration we've seen in the other. How sustainable do you think that is, Aaron?
Well, it's interesting, Jonathan. I think if you look at the underlying sectors in the economy, it really speaks to what you're talking about there, where you have the cyclicals in industrials and energy and bank segment of the market really under a lot of pressure, particularly banks and energy this year. Energy's off 50% within the S&P 500. Banks are off 20%. Loan growth is nowhere to be found. And then you sort of look at, well, the technology sector. Why is technology up over 25% year to date? Well, the one area of economic growth that, hopefully, I think everyone's holding out for all hope that we can see a nice pop is in the area of productivity. We have an aging working cohort, so we're not going to extract growth from our workers. It's going to have to be productivity gains, and which sector of the economy is going to really provide those potential tailwinds to productivity gains? We think it is technology. Now, of course, the question that we harken back to from a fundamental level is technology is relatively expensive relative to cyclicals, but we think justifiably so.
Well, Aaron, one thing I know you're touching on right now is the dispersion and variation between sectors and size as well. It's something you speak to, you put out in your note recently. I just wonder, beyond tech, Aaron, how you invest around some of these themes.
Absolutely. I mean, we believe that every client has a different risk profile and a different objective on a long-term basis. But within the equity market, we think there are wonderfully managed industrial companies. We think that there are certainly staples that need to be purchased. We are looking for great management teams, first of all, that are in sectors with wide moats across multiple segments of the economy. We're also looking at the correlation of sectors to one another. Last year, we had all sectors up at the same time. This year, we're seeing dispersion across sectors. So, you take a look at utilities. I mean, in the midst of this moment, we still are seeing unit growth at the water utility segment of the utility market, for example. We're still seeing nice mid-single-digit return on equity within the water segment of the utility marketplace. And so in the midst of this sort of uncertain moment, we think that certainly sectors outside of technology still make sense.
Aaron, I'd love to get you back on the programme soon. I really would. Fantastic conversation and great to hear from you. Aaron Cannon there on the latest in this market. Let's get to the markets right now, shall we? About 22 minutes into the session, equity advances up by 1.26% on the S&P 500. On the NASDAQ, up by about 1.36%. So we have a rally, and in the bond market, we have a sell-off. Yields up, curve steeper, up 4 basis points on 10s, up about 5 on 30s. Next up, the trading diary, your week ahead, right here on Bloomberg.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into right now buying individual mobility.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Equities bouncing back. Try and keep up with this market over the last couple of days. Fiscal talks on, fiscal talks off, fiscal stimulus plans post-election, a mini offer, a skinny deal. Been doing this for months, haven't we? The S&P 500 up by 1.3%, the Nasdaq up by 1.4% in the face of more talk about regulation down in DC. That's the equity market. Here's the trading diary, what you need to be watching through the rest of this week. We get the FOMC minutes later today at 2 p.m. Eastern, plus Fed Presidents John Williams and Charles Evans both discussing the outlook for the U.S. economy. Later tonight, it's the vice presidential debate from Salt Lake City at 9 p.m. Finally, on Thursday, we get another round of U.S. initial jobless claims. That's your week ahead. From New York and the City of London, this was the countdown to the Open. This was the Open, 26 minutes in. Equities up 1.26%. The conversation continues. Catch me on Twitter at FerroTV. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion.